Hey everybody, Chuck Barone here. Tuesday, January the 17th, 2023. Starting the week off on a Tuesday this week. We all had a holiday yesterday for the Martin Luther King celebration. Closed markets, not much to talk about yesterday, but plenty for the day. As always, we'd like to welcome you guys to the show and thank you for your support. You guys turning up and watching these videos every day means the world to us, and we couldn't appreciate you guys more. Markets today. Well, it was kind of a big nothing burger today in these markets. Stock market was mixed today with the Dow and S&P both down, while NASDAQ still squeaks out a small gain. Not much of a day in the markets. I think stock market might have rallied a little today, but Morgan Stanley coming out with their earnings, the wealthy helping them. Their earnings were not bad, but Goldman's earnings not so great. Their move into the retail and away from their traditional money-making ways as the giant investment bank, costing them some earnings. So that kind of weighed down on the market today, especially the Dow. Bond market today, down small, yields up. The 10-year, 3.53 up 2 basis points. The 2-year actually down 3 basis points to 4.20. The narrowing of the inversion, but not by much. This bond market, truthfully, I think is a little overpriced right now. I think these yields are too low. I think when you have a 2-year yield sitting pretty much the same as an overnight yield, it's kind of not right. The 10-year yield way less than the overnight rate. That's certainly not normal. So this market, this inversion is telling us we have a recession coming. Pretty severe one. It's been inverted for quite a while now. We'll see. I think that these mixed earnings we've been getting, we're going to start watching things a little more closely on the show here because the market really has no direction right now. It's kind of just trending down, but no real direction down. It's being driven by rumor, by data as it comes out daily. So there's no real rhyme or reason to things right now, which makes it extremely difficult to play the market. The dollar today was basically flat, up 0.11 points to 102.38. Not much of a move, basically a flat day for the dollar. Metals today down, but they had a huge rally, real nice rally. Gold settling at $1,908, down $7.40, but still a great price for gold right now. Silver, $23.91, down 35 cents. I think the market taking a little bit of a breather, some profit off the table. A nice rally in metals, and I really don't see much of a reason right now why this rally won't continue for a little bit. I think we're going to very easily see $20 gold and $2,000 an ounce gold. $25 silver coming soon. Looks like metals want to rally, and they don't really have a reason to stop right now, other than some fat profits. Oil today up $1.17, $81.03 per barrel of West Texas Intermediate. Oil's been kind of drifting back up again. It's been nice to have a little bit of relief at the gas pump. Looks like now it's kind of going the other way. Even with a very mild winter, I think oil prices responding to China's abandonment of their zero COVID policy. Lots of people are getting sick and dying in China, but they're opening up the economy, so that's always good for oil prices. Bitcoin today was up very small today after a really, really nice rally over the past week, sitting at $21,322, up $5,000. Up 27% since January the 1st. Bitcoin having a really nice rally. Truthfully, maybe one of you guys can tell me why. I really do not follow it very closely. Just kind of report on it here because I know a lot of you guys hold it. But a tremendous rally. Wow. News this week. Now I give this to you guys first of the week always, just to give you guys an idea of the news that's going to be coming this week that could move these markets and affect your investments. Tomorrow, we're going to get quite a bit of data. We're going to get business inventories, which are expected to be higher. We're going to get capacity utilization, which is expected to be lower. We're going to get industrial production, also expected to be lower. We're going to get the mortgage bankers index, again expected to be lower. We're going to get the the real news of the day tomorrow will be the PPI index. Of course, not as radical to the market as the CPI is, but I like PPI because it gives us an idea. These producers, they don't absorb these costs themselves. They tend to pass the costs along. So looking at PPI gives you an opportunity to kind of look into the future a little bit, because these producer prices, as they rise, will be reflected in the CPI, which will also rise, right? We're going to get retail sales also coming down, expected on Wednesday. On Thursday, we're going to get some real estate stuff. We'll get building permits expected to be down. Housing starts expected to be down. We'll get initial jobless claims, which is going to be the big news of the day, expected to be at 220,000, up from 205. We'll also get the Philadelphia Fed survey. And Friday, to round out the week, we'll get existing home sales, which also are expected to be down. So it doesn't sound like there's going to be much news coming this week that's going to be good for stocks. Maybe earnings can drive it. There's a lot of earnings coming this week, but I don't really see anything in this big data here. It sounds like everything's going to be down except the stuff that should be. The stuff that's up, business inventories, we don't like that. PPI, they're expecting that to be up 0.1% over last month. We'll see how these numbers come. It's going to be fascinating. It really is. I think that, the numbers we're going to be looking at most closely will be the PPI and the initial jobless claims. We already know real estate's going to hell. I've been telling you guys about that since the Fed first started raising interest rates. So these real estate numbers, coming in lower won't be much of a surprise. All right. Now, moving on to stuff you guys need to know today. Well, let's get rocking and rolling. Lots of speculation right now on the January 31st, February 1st Fed Open Market Committee meeting. The debate now is, will they raise a quarter or a half a point? My bet is it's going to be a quarter. I think I'll probably nail that one. Inflation still hot, but coming down. They really have not had time to get all of these rate increases absorbed into the market very well yet. The data we're getting showing prices coming down on a lot of different things, I think will lead the Fed to believe that they can get away with a quarter point increase this time around. So let's see where it ends up. It won't be very much longer, and we'll know the total there. Another interesting thing, shoppers starting to fight back, blowing off brand names, blowing off loyalty, refusing to pay higher prices on some of the products that they're used to buying. So companies that have been a little bit greedy with this greedflation we've talked about many, many times on the show, seeing big sales losses, consumers just worn out from these price increases. And I was reading, they said that even like the simplest of things are up 20%. Eggs, it's just crazy that some of the prices, consumers now have had enough of it. They're seeing that these prices are not really going to come back down as quickly as they went up. So I think what's going to happen is where the money goes is going to be really important to these businesses. I think we could start seeing another helpful sign for inflation. It looks like the gouging greedflation stuff is going to be over with. Companies are just not going to be able to raise prices forever. Everybody's seeing the inflation numbers coming down, wondering why prices aren't coming down on some stuff they buy in the supermarkets all the time. It's going to be fascinating to watch it all play out. Another interesting thing today, this company Veritas, the biggest landlord in San Francisco, defaulting on a $448 million loan. Now this is really interesting. This company, big company, they have this loan secured by 1,734 rental units in 62 buildings across San Francisco, both commercial and residential. A big, big company. Now, what the problem they're having is a lot of these loans, they're not written like a normal mortgage loan where they're a 30-year term. These loans are typically 10-year terms, and when they come due, most of the time the borrowers have the money to pay the loan. If not, they'll refi that loan or, refi whatever the balance is. And typically that has been kind of a seamless, no big deal transaction. But with rates spiking up the way they have, rental income coming down, vacancies in commercial buildings, some of these big landlords are having difficulty securing these loans. And here you see a big company like this one going to be looking like they're going to be going to bankruptcy court to protect those assets in the case of that giant loan. Just crazy, crazy times we're living in. This company probably felt like they were bulletproof. I mean, when you own that kind of real estate in San Francisco, you're probably thinking you're in pretty good shape. The idea that they would default on a loan like that, pretty shocking stuff. Anyway, guys, not a lot of news today. That's pretty much it for the day. The big sizzler is Bitcoin, 27% since January 1st. Today is only the 17th, man. That's a gigantic move. Go Bitcoin. Metal sizzling up. All of our favorites here on the show doing very well. What we've been recommending to you guys is doing very, very well. The defensive stock positions we've recommended, the dividend-paying stocks, have all gone up or been holding their own. If you've been listening to the advice we've been given, even though it's very simple advice, and I just don't think that you need algorithms or anything super complex to get ahead in this world. If you've been listening to the stuff we've said, taken our advice and done some of the things we've suggested, you're doing pretty good right now, and I hope you appreciate it. Anyway, guys, that's it for the day. We'll be back tomorrow. Big data coming tomorrow. Can't wait to see the results of all this stuff. We'll bring you the news as you need it. As always, we appreciate your support. If you like what you're hearing, hit the like button. Ask your questions and comments. Share the video with your friends. We'll be back again tomorrow. Till then, take care. Thanks.